It's not very often that we see South African inflation below what we see in the UK, which came in at 3.7 year on year in December. Nomvuyo, how do you see all of this playing out in today's session?
Morning, Eleni. Well, starting with the CPI, it certainly was a welcome surprise. It came in a touch below market expectations, which had been pegged at 3.6% year on year. And I think that what's significant is that it came in below expected in spite of a petrol price increase in the month. And the fact that about 20% of the basket is actually surveyed in December. So there was significant scope for an upward surprise in CPI. So it was significant that it came in below expectations. But when you look at the MPC, we still maintain the view that rates are going to remain on hold. Although inflation surprised to the downside, we saw some very buoyant growth in retail sales and other recent indicators of economic activity. So at this point, the risks to the inflation outlook appear evenly balanced. And so we're not anticipating that there'll be a change in the repo rate today.
Looking at the bond markets, and it's something that many have been talking about, the aggressive sell-off that we've seen over the past week or so. We're talking about 8.5 billion rand. We were talking a little earlier, we're saying that that number for the year to date could be as much as around 12 billion rand so far. Do you think that we're going to see a significant correction coming through in the local currency purely because we have seen such strong outflows out of South Africa?
We wouldn't be looking for a significant correction at this point, Eleni. We think that the rand is going to continue to drift weaker because, if you just look at today's MPC, for instance, a lot of the, if you look at last year, there had been a bit of a rotation out of bonds and into equity inflows, and that had actually picked up. So if the MPC keeps rates on hold today, one could see a bit of an outflow of equity portfolio inflows, simply because a cut in rates is generally perceived to be positive for economic growth. But even if the MPC does cut the repo rate, which is certainly not our base case scenario, it would also be supportive of a weaker rand because that narrows South Africa's yield differential and also makes it cheaper for the Reserve Bank to continue accumulating reserves. So at this point, the risks to the rand certainly do appear to favor continued rand weakness, but we'd be looking at a move to 704, 708 in the short term, so certainly not a sharp correction.
In the short term, Nomvuyo, do you think it's going to be sustained at that level? Going forward into next week, what are you expecting on the currency front? Also interesting to note that we've seen the likes of the Shanghai market coming under significant pressure after fantastic numbers from the growth front for the fourth quarter, 9.8%, inflation hitting 4.6% from 5.1% in November. How do you see that then affecting the local currency?
Well, Eleni, as I said, the risk to the rand certainly remains stacked in favor of a weaker rand at this point. I think much will depend on the outcome of the MPC's meeting today and what indication they give on future inflation trajectory or potential future moves by the MPC. So we think that the rand is going to continue to drift weaker, but there's nothing that we can foresee at this point that would lead to a very sharp depreciation or correction.